Hello traders. Today is the 15th of August 2011, and happy trading to you all. London is now closed, but New York is still open. Okay, for those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. Okay, this video is about live Elliott Wave trading. Okay, when we are talking about Elliott Wave, we must combine the Elliott Wave with the market patterns. Very important. Okay, if you do not understand the market pattern, you cannot succeed in using accurately the Elliott Wave theory. Okay, according to the market patterns, the market will go down, the market will go horizontal, and the market will go up. So trend, pause, trend. This is the market patterns. Okay, you can perfectly check our channel at www.youtube.com/George Rio. Check the video regarding the market patterns, trend, pause, trend. Okay, for those of you who are using what I call a market profile, they will talk about imbalanced market, a balanced market, and also an imbalanced market. Okay, an imbalanced market is a trending market. A market that is trending is imbalanced because one particular group of the market, okay, is exceeding the other group. So when the price is going up, we have an imbalanced market because the bulls exceed the bear. Okay, when the market is going down, okay, we have also an imbalanced market. The bear are dominating, okay, the bulls. So we have an imbalanced market, which means one group is dominating the other group. Very important. So an imbalanced market is a market that is trending. Okay, so the market pattern is trend, pause, trend, which means the market does not always trend. In order to achieve consistent winning trend, one must be able to locate the market patterns. Very important. There is a difference between the market patterns and the price pattern. Double top, double bottom, okay, head and shoulder pattern, inverted head and shoulder. These are price pattern. But when we are talking about the market pattern, we are talking about a trending, a consolidation, and a trending again. Very important. As you can see here on the 3-minute chart, as I told you before, regarding the Elliott Wave theory, the Elliott Wave theory is a fractal pattern because you can see the Elliott Wave theory on the 1-minute chart, on the 30-second, on any time frame, on the hourly chart, 4-hour chart, daily chart, weekly chart, monthly chart, okay, a quarterly chart, okay, yearly chart, okay. Whichever time frame you are on, you are likely to see Elliott Wave theory, 5 wave plus ABC corrective move. Very important. Talking about the Elliott Wave theory, there is a difference regarding the theory and the reality of the market. One of the things that inspire myself is about this a gentleman called Mr. Trump. Mr. Trump said that never ever give up. Okay, never ever give up. This is one of the things that put me forward, that I never ever give up. When you are doing something, when you set a goal for yourself, okay, you must stick to it, which means that's what I'm talking about all the time, talking about keep your eyes on the ball. Okay, so when you want to achieve something, you must set for yourself a goal or a target. Okay, when you set for yourself a goal or a target, okay, you must constantly focus on the goal, and this will keep you going, because you may see some ups and downs, but if you keep your eyes on the goal, you will remain focused, which means you cannot give up. Okay, very important, because all your concentration, all your focus, okay, is directed towards the goal. What do you want to achieve? What do you want to do? Okay, but some traders or some people, they don't have a goal. I want to encourage you, whatever you want to do in this market, what is your goal? What do you want to achieve in this market? Okay, why do you come in the market for? Okay, so do not give up. This is the key to achieve successful winning trade in this market. Okay, My goal, okay, is to achieve consistent winning trade and to assist, okay, ordinary traders, okay. But I'm not in a business to trade for traders, but I'm in a business to direct the attention, okay, of traders to the most important thing in this market, the price itself. Okay, very important. So whatever you are doing, okay, because when you start trading first, you're going through different process. Okay, so you start first, you do go through this exploration, you are looking for a holy grail, which means a system that will trade for you, or something that will you can use every day, that can just print money for you. It does not exist. Okay, the market is changing constantly because, okay, of the news, the fundamentals, okay, and the leaders, okay. These are changing the market constantly. But so in order to achieve the consistent winning trade, one must apply what I call the stable data in the market and the trading triangle. It takes time, and also it takes practice. Myself, okay, it takes me some time to get to where I am now, to understand what is going on in the market. Every day, new traders are coming to the market. Some are new traders, some have spent 1 year, some have spent 2 years, some have spent 3 years. But I think after 4 years, one must be able, okay, to understand what is going on in the market. What I want to say to you here is that if you have spent more than 4 years in the market, you must quickly take a piece of paper and write down your weaknesses and your strengths. Very important. And then set for yourself a target. The key to never give up, okay, if you do not want to give up, you must have a goal. The goal will keep you going. Very important. As you can see on this 3-minute chart, okay, the price was going down. It went down, it went horizontal, and then went down. We are looking on the 3-minute chart of the Australian dollar US dollar currency pair, okay. This currency pair will move in the same direction like the S&P 500, like the Dow Jones, like the FTSE 100, like the ASX, okay, like the Nikkei 225, okay, like all the major indices, like the stock market. This Australian dollar, US dollar will move in the same direction like the gold, like crude oil. Very important currency pair, like the Euro USD, okay. In my view, this currency pair is overbought, but recently in France, in Belgium, in Spain, okay, in Italy, they have banned shorting for 15 days. This is a very important information, which means all the people that were shorting the market has to close their shorting position and buy instead. So the market will go up. You see, this is just one click of information. This is what we call a market manipulation. Okay, so the price is going down. Okay, the price going down, as you see here. How do we know? Because the price was displaying, you see this high here, followed by a lower high, another lower high. You see the low and the lower low. This is how we know that the price is going down. If you draw also your channel, you will see that this channel is a declining channel. So the price on this 3-minute chart was going down. So we have what I call imbalanced market, a downtrend on this 3-minute chart. Like I told you before, the Elliott Wave theory is a fractal pattern. What I say to traders that nothing can replace you. We give priority to traders. Traders are the most important thing. When you come in contact with us, we do things differently. Some traders, where you were in contact with other teachers before, so to speak, and they have a different way of doing things. We are not here to criticize other traders, okay? You can see that after this low here, if you pay attention carefully on this 3-minute chart, on this channel that I draw on this chart, the price was displaying, okay, a lower lows, a lower high. Here, can you see that? The price display a higher low, telling us that the momentum has changed. Okay, even though we are on the 3-minute chart, this is a powerful information. Just understanding the definition of a downtrend and an uptrend. So here you see this line here is telling me that the trend is the momentum is changing, but then the price came out of the channel. Now we want to count the wave. Okay. Talking about Elliott Wave theory, okay, some traders send me email regarding the Elliott Wave theory. There are a lot of things, but it will take you time to understand the Elliott Wave and to master it. But there is no need to rush. Okay, very important. There is no need to rush. Okay, so here we have okay, the first Elliott wave from this point onward. Okay, in this case, the first Elliott wave, the third Elliott wave, and the fifth Elliott wave can be divided into 5 small waves. Now, the difference between the stochastic markd.com and any other trading method is that we focus, okay, on the practical trading, and we give priority to traders. So we want traders to learn it, to understand it themselves, and to do it by themselves. This is the difference. We do not give trading signal to traders. We do not trade for traders, but we point traders in the right direction, because some traders can trade perfectly, but they are struggling. And this is where we come in, because we give them tools that work. Okay, so the first Elliott wave has started from here because the momentum has changed. But in this particular case, this first Elliott wave has been divided into 5 small waves. Okay, so this first Elliott wave has been divided into 5 small waves. The first Elliott wave, the third Elliott wave, and the fifth Elliott wave can be divided into 5 small waves. So this first Elliott wave has been divided into 5 small waves. First wave, second wave, third wave, fourth wave, and the fifth Elliott wave. I'll do it again. First wave, second wave, third wave, fourth wave, and the fifth Elliott wave has ended here. From here to here, that's the first Elliott wave. You will notice also that the first Elliott wave has broken, okay, this what I call the nut here, because this was the last low, followed by a higher low, and the nut is this one here, and the first Elliott wave has broken in here and has retested it with the second Elliott wave. So first, you see that from here to here, that's the first Elliott wave, which has been divided into 5 small waves. Now, in theory, the third Elliott wave must be the longest wave. But I have a good news for you. The theory is different from the reality of the market. As you can see, this small third Elliott wave within the first Elliott wave is not the longest. The market, the reality of the market, the news, the fundamental, the market manipulation, the market distortion, the market exaggeration will create a lot of distortion in the market, which means what you know in the theory is not exactly what is happening in the market. In order to achieve consistent winning trend, one must be able to be flexible. Okay, which means you can detach yourself from the old way of trading and adopt a new set, a new mindset. Renew yourself, look for things that can work for you. Okay, now you will see few of traders that will talk to you like this, because it's not easy to teach somebody to trade. Traders get emotional, they go through different stages, and it's not every trader that can teach people to trade. So from here to this level here, that's the first Elliott wave, which has been divided into 5 small waves. The second wave is this one here, from here down to this wave, this level here. Now, then we have the third Elliott wave. In this case, on this 3-minute chart again, the third Elliott wave has been divided again into 5 small waves. Remember, the first wave, the third wave, and the fifth wave can be divided into 5 waves, but the second wave and the fourth wave can be divided into ABC corrective move. That's the theory. Okay, so now my second wave is the one that retested, okay, the nut here. Okay, this one from here to here, that's the second wave. If we are talking about Elliott wave, the wave count, traders get a lot of disagreement when it comes to a wave count. They will say it's completely nonsense, but the point, the key I want to talk about is that is your trade successful? Because if you count it properly, if your decision were right, if your count was perfect, you should be able to make excellent decision. If you count it and you make a trading decision, and that trading decision happened to be excellent trading decision, then you know that your count were right. That's what I'm saying to you. But if you count it and you make a trade decision and it did not work for you, you know that you fool yourself. It's just simple. The third Elliott wave started from here, okay, from here, So in this case again, the third Elliott wave has been divided into 5 small waves. Okay, the third Elliott wave in this 3-minute chart has been divided into 5 small waves. First small wave, second small wave, third small wave, fourth small wave, and a fifth small wave. So the third Elliott wave has ended here. So from this level here up to this level here, we have our third Elliott wave. First small wave within the third Elliott wave, second small wave within the third Elliott wave, third small wave within the third Elliott wave, fourth small wave within the third Elliott wave, and fifth small wave within the third Elliott wave. In this case, this third Elliott wave has been divided into a 5 small waves. You see now? And then we have the normal fourth wave. In this case, the fourth wave was not divided into ABC corrective move. And then we have the fifth wave from here. Okay, so we have first wave within the fifth wave, second wave within the fifth wave, third wave within the fifth wave, okay, and then fourth wave within the fifth wave, and the fifth wave within the fifth wave. Now you get the message. From this point onward, from here, okay, first, second, third, fourth, fifth, to this level here, this is the fifth wave, which has been divided into 5 small waves. Now we are expecting the ABC corrective move. This is from here down to this level here. That's the A corrective move. From here to this level here, that's the B corrective move. From here to this level here, that's the C corrective move. A, B, C. You understand? So now, in my view, we have achieved, okay, the 5 small wave, the 5 wave, plus ABC corrective move. Now, if you ask another trader to count the wave, he may say to you, that's completely wrong, okay? But that's my count, okay? But I can assure you, as you can see, the channel will tell you, okay? Because if you draw a new channel here, the channel, that's what I'm telling you, the price is doing only 3 things. Okay? Some traders think that trading should be complicated. I disagree. Trading is a simple game. 3 channels you have in this market. One channel is rising, one channel is declining, another channel is horizontal. If you don't see a channel, you know that something else is going on. So we have from here all the way up here 5 waves, where the first wave has been divided into 5 small waves, the third wave also has been divided into 5 small waves, and the fifth wave has been divided also into 5 small waves, and we have the ABC corrective move. Right here, the price changed direction and went up to this level. Ladies and gentlemen, if you want to master the subject of Elliott Wave, you need to go to www.24elliottwave.com to master the subject of Elliott Wave. Now, when you come to that website, okay, try to put aside what you have known before regarding Elliott Wave and just look at watch our videos, okay, and learn something new. Maybe that will help you in your trading style, because every trader have a trading style. That's why we do not try to impose our method of trading on another trader. It will take time and practice, and traders are in the different levels. This is the problem, okay? So you may see somebody that is new, that is got a lot of knowledge, but cannot trade. The theory is different. You can go on the internet and learn about trading, but there is a difference between knowing about trading and trading by itself. When you want to trade, do me a favor, use the 5% money management rules. If you have 1,000 trading account, which is very small, you can only trade with $50. Okay, $1,000, you can only trade with $50. But if you have $100,000, then you can decide not to use the 5%, maybe use 1%. So if you open 5 trade or 10 trade, the total amount that you are risking, okay, must not exceed 5% of your trading account. Credit to FSCM. Okay, we say this to traders, but if you cut that corner, it's your own decision. Now the second thing, when you place a trade, okay, do me a favor, use a stop loss if your broker gives you that facility. Very important. Do not expect to trade like a professional trader in one day, but if you start learning it, stick to it and try to do it properly. No one can do it for you. You can perfectly trade, like I told you, if you stick to the channels and you draw your channel constantly, as I show you here. The first channel that I draw on this 3-minute chart, as you can see, the channel was declining. You see, this channel here was declining on the 3-minute chart. Okay, ladies and gentlemen, was declining on this 3-minute chart. It's a channel that is going down. And then we have a channel that was rising, and we count 5 waves within that channel. You see now? Again, the price went again in another channel. ABC corrective move was also in a declining channel, even though we are on the 3-minute chart. If you apply these rules on the hourly chart, or on the daily chart, or on the monthly chart, paying attention to the price itself, the number one indicator, you will be able, okay, to cut your losses, okay, and start enjoying your trade. Now the price came back after the ABC corrective move, okay. The price tried to go up. Look what's happened now, ladies and gentlemen. We are paying attention to the price itself, nothing else. The price tried to go up. This was the previous high that we have achieved after counting the 5 waves. Look what the price did. The price went all the way up here only to touch it. Now, why the price could not break above it? Okay, it's now stuck below it. Okay. Now, what are you thinking of? Okay, now we draw again another channel, ladies and gentlemen. This is, you can do this if you want to do it without cutting corners. You can go and buy all sort of trading robot or whatever. You may spend 10 years going round. It's perfectly normal to go round. This is the process of trading. Myself, when I start trading first, I go round. I go to different stages, a different mindset until I get it right. The reason why we build the TSTW24, TSTWSY08, TSTWSY008 is because we want to assist ordinary traders and also to educate traders. I hope you enjoyed this video also regarding the live Elliott Wave that you will put into practice in order to become a better trader. Thank you for watching, and we will speak to you very soon. We are the TSTW24 traders.